Good evening. Hello. So I will start our seminar for first-time home buyers. If some of you maybe know me, some may not. So I introduce myself. My name is Boris Sapozhnikov. I'm a mortgage broker. And I decided to create this webinar for first-time home buyers. I hope you enjoy my presentation. A live chat will help us, so you can ask questions, you can just say hello, wave, send some smiles, yeah, whatever you decide to do at top chat. On this first page, you maybe see that this is chat, this presentation is including most information that every first-time home buyers needs to have. I must start with disclaimer because it's not individual consultation. Of course, you will ask your questions, and of course, I will provide answers. But I am strongly encourage look personalized advice when someone can review your documents and provide you with personal advice. Again, I encourage you to ask any questions that you may have. Yeah, thank you. I know that you say that majority maybe would like to watch this presentation in Russian. Unfortunately, I can't do this in Russian for several reasons. First reason, I saw who signed up for this presentation. It's not only Russian-speaking users, also other speaker users. So this presentation will be in English. If you need personal consultation in Russian, you can always contact me and I can provide personal consultation in Russian, but this presentation will be in English. Also, it requires from me to present and provide all information in the best and correct form, and this information can be reviewed by authorities, and they will know that what I'm presenting here is correct and nothing wrong. So it's also good to have viewers from other languages, and also it will be more reliable information. Okay, so every mortgage starts with mortgage pre-approval, and when you looking to buy a home or condo, you should start with mortgage pre-approval. So ever, please don't start to do search for your future house without mortgage pre-approval. First, majority of the realtors will not show you too much, or maybe even prevent you from watching properties just because you don't have pre-approval, because no one wants to spend time and show houses to someone who may not eligible or cannot buy the house or condo. Pre-approval is basically says to you and your realtor that you can start to look for properties, and even if you don't have your own realtor, you can start to look for properties if you have a document, pre-approval document, that can you receive from any bank or from mortgage broker, as myself. Again, my name is Boris Sapozhnikov and I am a mortgage broker. How to start to do mortgage pre-approval? So if you want to do mortgage pre-approval with me, it's very easy. You can use the link provided here, linktree.boris.s. When you go on this, you will see that this page, a similar page. On this page, you will be able to get information about me. You can watch this video and other videos that are recorded for home buyers. Also, you can get information about how to apply for mortgage. Like here you can see a button how to apply for mortgage, and actually apply now. If you press here, you can start your mortgage application. Also many other links provided here, so you can reach me via WhatsApp, Telegram, regular phone call, etc. Okay, so let's say you decided to get mortgage pre-approval. So from where to start? First of all, check if you have enough for down payment. It's usually a requirement number one to have some cash available. In today's environment, 5% down payment is enough. So if you buying something under $500,000, 5% enough. If you buying more than for $500,000, you will require to have 10% down payment. So basically, let's say I should have here an example. Let's say you have, or you want to buy something for 700. So for the first 500, you need 5%. It will be 25,000. And for the extra 200, this, which is on top of 500, you need 10%. So it's 20,000. So you need 45,000 for a down payment if you want to buy something for 700,000. Of course, the more down payment you have more chances to be approved. So from where you can get this down payment? We will discuss several options, not right now, like a little bit later. But a standard down payment check is just check of your savings and other accounts. Bank usually wants to see the money on your account 90 days. So right now we're in June, so bank will check March, April, May. If money was in your account during the March, April, May, of course you can add money to the money that you had before through your salary, from child benefits, from any other standard sources of income. So it's not a problem. You just need to provide information about the money, the source of this money, and it's only 3 months as required. You can also get money as a gift if it's immediate family. All banks accepting from immediate family, like from mom, dad, but some lenders or some banks allow to use even uncles, aunts, grandparents. So if you have families that can help, it's obviously allowed and you can do it. I maybe will check if anyone have maybe question here. Okay, so again, just a reminder, we have a chat here and you can ask your question via chat. So a question is here, if not a family member. Unfortunately, if it's a friend not allowed to give you like money as a gift. But for example, friend can be part of your mortgage application. So in Canada, banks allowed friend participate in purchase. So for example, you don't have money for down payment, but your friend has enough money for down payment, he can participate in the purchase, be on application and use his money for down payment. This is how it works. If it's kind of some other specific situation, just give me a call and we can discuss it further. But if it's not family member, usually it's not allowed. But if person is not a family member, but this person on mortgage application, it allowed. Okay, I don't see any other questions, but if several minutes after, oh, I want to ask something about down payment, don't worry, you can always write your question in live chat and I can go back. Okay, so we spoke about requirement number 1, it was down payment. Requirement number 2, mortgage default insurance. So if you don't have 20% down payment, you require purchase mortgage default insurance. It's usually added to your mortgage, and it's as a standard, it's protecting lender, it's not protecting you. But some exceptions exist, and not many people know about these exceptions. In a minute I will start to talk about these exceptions. What is important to know about mortgage default insurance? It's not obvious, and it's not always good to buy with 20, 25 or 30% down payment. Sometimes I am saying my clients, if you have 20% down payment, it doesn't mean you must use all 20%. You can buy with 15%, you can buy with 10%, and save some money for improvement of your home, or maybe for some emergencies, or maybe if you will lose a job, you will have some reserve to pay down your mortgage. So mortgage default insurance, it's actually is good thing to have, and here's an example why it's good to have. In Canada we have only 3 big organizations or companies that provide mortgage default insurance, or we call this insurer. Okay, so we have only 3. First and the oldest one, CMHC, Canada Mortgage Housing Corporation. Second, and third, Canada Guarantee. It doesn't mean it doesn't matter what is the order. You can say Canada Guarantee, second, CMHC. I just randomly put them in this order, but all my clients use all of them. So it doesn't matter where your mortgage will be insured. It's important that it will be insured, and basically you don't have a choice. If you don't have 20%, you must have insurance from one of these companies. And if all 3 of them declining you will never buy a home with less than 20% of down payment. And it's important to understand. Sometimes people shopping, trying one bank, second bank, and they say, oh, it's many banks in Canada. Yes, it's true. We have 40, 50, I don't know even how many, maybe close to 100, several different banks, some of them federally regulated, some of them provincially regulated. The number, it doesn't matter. What is important is that we have only 3 insurers. So if one bank will use one insurer and you try to buy and you will be declined, another bank you will use another insurer and you will be declined, and another bank will use another insurer and you will be declined. If you will be declined by all 3 insurers, I can definitely say it doesn't matter how many banks we have in Canada, no one will give you mortgage if you have less than 20% down payment. So think twice before you jumping, or just because you get declined somewhere, don't run and jump on any other bank, because you can kind of close all doors and it's not good. So what these companies can do for you, it's obvious. If you will default, so you will not be able to pay your mortgage, it's kind of obvious that your insurance will cover bank, and bank will get all money back, so no problem for the bank. But how it may help you? If you have a temporary difficult situation, for example, you cannot pay because somebody is sick, or because of divorce, or because of disability, or because of illness. So you don't have only you and a bank, you also have insurer if you purchase mortgage insurance. So you also have insurer who may help you. For example, they can delay payments. They can cancel payments for certain period of time. They can recalculate payments. How? They can extend amortization. Let's say you took mortgage for 25 years. they can extend for 30 years, give you some air, so you will pay less. Even if it will happen in 10 or 15 years from now, if you purchase insurance many years ago, it's still attached to your house. It's not attached to the bank. You can switch banks with the same insurance. Like for example, you got insurance from Canada Guarantee, and today you with Scotia, in several months you with TD, in several months you in Alberta with Alberta Trust Bank, in several months you switch to Sagan. For any reason why it's happened, you switch in between banks with the same mortgage, but insurance will stay with the same insurance. Of course, no one switch mortgage every several months, but it may happen every several years, especially if you kind of trying to refinance and try to get better deal or try to lower your payment or yeah. Some natural disasters can happen. Yeah, it can be fire, like right now Manitoba is a state of emergency because of a lot of fires in Manitoba. Several years it was Alberta state of emergency. It was many fires in Alberta. So when it's state of emergency and some fires around, you cannot go to work or you was evacuated, you losing a job temporary, you cannot pay mortgage, insurer can help. They can kind of slow down process, they can speak to the bank, they can be with you. So please remember, if you purchase a home and you have a mortgage insurance, it may help. Okay, I want to check maybe some questions here. In general, if my friend gives me, let's say 10K, and in 6 months I will want to use this money, it doesn't allowed? Okay, you ask general question, and in general, you can use this money. But if you declare this is as a friend money, it's borrowed money, so basically you must return this money to the friend at some point, so bank will not allow you to use this money. Okay, if you're asking in general. Again, if you have something specific situation and you want to discuss this in one-to-one conversation, you're more than welcome to give me a call and I will answer on your specific situation question. I don't know you, I don't know your friend, I don't know where your friend lives, in what province, maybe he is not even in Canada, I don't know if he is citizen. It's many small components that may play a role here. So please, if you need consultation about this specific matter, give me a call. It will take me 5 minutes to understand and answer your question. I don't see any other questions, so I will continue. Third requirement is credit profile. Everyone knows that we need to have a good credit score in Canada. But how score can influence? Of course, higher score is usually better conditions and lower mortgage rate. You will not believe me if I will say, but it's true, that some banks even want to see that your credit score more than 800. Yeah, in Canada the maximum score is 900, and some bank says, if you will show me that your score is more than 800, I may consider lower the rate. I may consider give you more money for your mortgage. So it's kind of interesting how credit score can change things related to the mortgage. Now, why I wrote here not credit score, why I put here credit profile? Because banks look not just on the score, they look on your general profile, on your general behavior, how you acting, like how you pay your credit card, how long you keep high balance on your credit card, and other things. So for example, here I am presenting how we need to behave if we have credit cards. So if I have credit card, I am always make sure that balance on the card under 30%. In certain circumstances, if I need to go higher than 30%, I can. But my red line is half of the balance of 50%. Let's say I have a credit card with the limit 1000. Is it a good card? Maybe the best card in the world, but my limit is only $300 and my middle line or red line is $500 and I cannot use more than this. If I will use every time that I will use more, bank will record this. And maybe my score is 700 and I believe that I will get the best mortgage in the world, but when it comes to the mortgage, your broker promised you to get, let's say, 3.99, and after calling you and said, after detailed consideration on your credit, bank said no more than 4.14. And you're surprised, say, but my score is more than 700, and I hear it online, people say 680 is enough. Yeah, it's enough. But it's not enough for this specific bank, for this specific interest rate, for this specific situation. Why? Because they notice that you kept higher balances from the time to time. Yes, you will get a mortgage eventually, but maybe you will pay a little bit more than someone who kept his or her balances in standard. Please don't forget pay your regular bills on time, like utilities, rental, and everything. I recently had a client and I had a problem with the client. Why? Because they didn't pay on time electricity bill and it was reported actually to credit bureau. Yeah, so companies not waiting too long and not really like sitting and saying, oh, somebody forgot to pay, or they will pay next month. No, they are worried when they're not receiving money and they don't wait too long. They report into credit bureau and this record can stay approximately 7 years there. So yeah, if you don't want to be in trouble in Canada, please pay all your bills in time and don't argue. Sometimes people say, but I believe my bill should be 150, but they charge me 160, so I'm not going to pay them. You're allowed to argue, you are allowed to fight, but first you need to pay your bill. So first pay 160 and after go and try to get $10 back. If you will pay 150, you were supposed to pay 160 for this $10, you can get a record on your credit bureau, and after you maybe will be surprised that you will never get a mortgage just because of this. Okay, so I want to see if any other questions here. Will there be a recording of this leave? Yeah, it's automatically recorded for simple reason. Maybe you noticed we are on YouTube and everything on YouTube recorded. So with the same link, you can always go back and rewatch again and again. What is the good interest rate from banks right now? It depends by many factors, and I will definitely show you guys how interest rate calculated by banks. It's part of my presentation. I will show what can change interest rate. Like for example, interest rate maybe in one bank 3.8, but when you apply for this rate, the same bank maybe will give you only 4.5, and you will be surprised why. And we will talk about the factors that can increase rate. Okay, so the next, we spoke about credit profile. So if you just arrive to Canada and maybe you just 6 months, 12 months in Canada, having credit cards, having phone maybe is not enough credit history. So banks will require different additional documents. If your down payment just 5%, they may ask to prove that you rented. So you need to provide bank statements and show that you every month you paid for rent for at least 12 months. You should provide a letter from your landlord saying that your balance in good standing. In addition to this, you should provide one more proof, for example, from phone company, that you paid all your 12 recent bills on time. Again, who needs to provide this? It's usually required from newcomers who try to buy a house just a year after arriving to Canada. It's also required for Canadians. For example, I have many Canadian friends that after certain years, after they paid out their mortgages, they decided to cancel credit cards, so their credit history went from 700 to 0 because no records with the banks. So when I am checking their credit history, I see the credit record 0. Last time they used credit card 4 or 5 years ago. They already retired, but they maybe now need a mortgage for any reason, to help maybe their children, or to buy maybe something for leisure, like maybe some small house close to the lake, or whatever they want to buy, and they can find themselves in difficult situations, so they need also to provide the similar proof. So this is not just for newcomers, this rental bills and phone bills and maybe childcare expenses and any other bills, all this checked. Even with Canadian banks may ask this to even Canadian citizens to provide these documents if they didn't use credit cards for a long period of time, or went out from Canada to other countries, returned. Yeah, if you have 10% down payment, it's much more easier to show alternative credit. It can be shown through the 6 months of bank statements. So you just providing your checking account statements where you have your income, and when you provide checking account statements, you can so bank, what is bank doing with your like bank 6 months statements? They're just checking that you always balance your statement, that you never go to in the minus, so you're always positive, you always have good records, no problems, no check returns, nothing like this. This is what they usually want to see. Okay, before I start to speak about income, I want to check if maybe any other questions here. Okay, no more new questions, so I'm returning. Okay, income. Income is usually really simple to verify. For example, if you work somewhere and you have stable job, stable hours, so your employer can provide you with the pay stubs and letter. If letter says that you in good standing, at least 3 months or last 3 months you worked full time and everything good, you're not on probation, no problem, you will get a mortgage. It's not like many people say, oh, it's just for newcomers. No, again, not. Even if you're Canadian citizen and you, for example, worked as a teacher and you decided to change career, and instead of working as a teacher, now you're working as a dishwasher, it's a new career. You maybe make much more as a dishwasher than a teacher, and you need to wait 3 months. You need to provide a letter from your restaurant saying that you're in good standing, you change career, you're not on probation, you're full-time, you're stable, and everything good. Okay? About people who may have some bonuses, or maybe they have what is called variable income. Let's say today I'm making $100 and in 2 weeks I'm making $500, and in several weeks I'm not making anything, so I don't have stable income. In these cases, bank wants to see last 2 years. So if your income not stable, unfortunately you don't have a choice, you need to wait 2 years. Especially for casual workers, you must wait 2 years. And much more documents required: T4, T1, NOA, Notice of Assessment, 2 years documents like 4 pay stubs. No, job letter as usual, as everyone should provide. So much more documents required if your income is not stable. One of the popular questions that people ask me: what is going on if I'm working part-time? If you work part-time and your hours guaranteed, no problem. 3 months and you considered as a full-time employee. Okay, again, I would like to check questions. What could be the reason for 3 main insurers for mortgage to reject me with down payment under 20%? Great question. So this is question about insurer. Like, what can be reasons that 3 major insurers will reject me? Credit score, for example. And maybe not even credit score, I will say credit history. Let's say your credit score is 650. Okay, 650, you passed. Like, why? Because the minimum requirement 600. Insurer knows that 650, you probably was not behaved perfectly. So they start to dig. They want to see a full report. Every time that you crossed 50% on your credit card, it was recorded. Every time that you missed maybe payment here and there, it was recorded. So if you was not stable, all insurers will decline. Okay, it's just one of the examples, but many other examples can be. Sometimes a property that you want to buy can be declined by all 3 insurers. I saw cases when person was in love with the house, very cheap house, around 120,000, you may not believe, but in some small towns, in Saskatchewan, Manitoba, even in Alberta, very like small towns, far away from major cities, you can find house for 120. And person fall in love with this house and want to buy, and insurer says, I don't have any records about this house. I don't know anything about this house. It was never mortgaged in this house. I don't know when it was built. So insurer may say, I want to see a lot of papers. And when they looked on all these old documents, they may say, I want to send appraiser, a person who is a professional and wants and know how to check the houses. So this person comes and checking houses and say, no, it's not worth to insure this house. So you can be declined not because of you can be declined because of the house that you picked. And of course, this is an example kind of rare, but once I had a case in Alberta, in Calgary, in very popular area. One of the houses, it was not like house for one family, it was more like high-rise apartment. So it was a building with many apartments. So insurer rejected and said the apartment company was not behaved well. There was not saving enough money from condo fees. So in case of emergency, this building will not have enough funds to maintain this building. So I'm not ready to insure this building. So you will ask, so no one will live in this house? Of course people will live there, but they will need to buy with 20% down. They will be required in this building have 20%. So properties, or because of properties, insurer can decline. I hope I answer your question. What happens if you have car loan? No, it's kind of obvious answer. If you have a car loan, you probably will be approved for smaller amount. Yeah, but it all depends by your income. Once I like not once, just about a year and a half, like 2 years ago, I worked with one family. They had a car loan. They paid more than $1,000 every month for the car, but they had very good income, and mortgage they wanted was good enough for them, so they bought a house, and car loan was not really, like I will say, it was not a problem. So for some people, car loan, it can change everything. For some people, it can have small influence, and eventually how we know that you will be eventually approved, you should start with the pre-approval. So like I started my presentation with pre-approval. I spoke about pre-approvals. You need to start to do your pre-approval. When you're doing pre-approval, your mortgage broker collecting documents and calculating if car loan has some influence, partial influence, or maybe it doesn't matter if you have car loan or not. Sometimes even people come to me and say, you know, I don't want to buy a house now. I'm planning to buy maybe in 2 years from now. I want to get pre-approval, and please calculate for me. I want to buy a car, so please calculate how much should be my monthly payments so it will not affect my pre-approval. I am providing this type of services. So people applying for a mortgage, I'm doing pre-approval, and I'm calculating how much monthly payments if they are going to buy a car and have a car loan. So I'm calculating how much will not affect their mortgage pre-approval. So it's based on income and other parameters. Okay, I will look. What if buyer has been living in Ontario but considering moving to Alberta and purchase a house out there, but he doesn't have a job in Alberta, no income outside Ontario? Will this person could qualify for a mortgage? Okay, it's complicated. In general, if, for example, you have a work permit and you live in Ontario and you want to buy in Alberta, you can't. If you have permanent resident in Ontario and you want to buy in Alberta, you can, but you need 20% down, minimum. If you don't have 20% down and you don't have permanent resident, not citizen, you just work permit, so you live in Ontario, you have work permit, and you want to buy in Alberta and you have only 5, 10, 15% down payment, step number 1, move to Alberta. Step number 2, get a job there and you can buy. Some exceptions apply. If in Ontario you have a remote job and you can prove by moving into Alberta, you can still work for the same company in Ontario that not required your presence in the office because you're working remotely anyway, yes, in this scenario you can buy in Alberta. So like you ask like simple question, but I provided you so many scenarios. Again, give me a call, tell me your story, I will give you an answer specifically for you. Okay, let's move. Requirement number 5. A lot of people not realize that everything costs money. So for example, to buy a home, it's not just down payment, you need money to close the deal. For example, in Alberta, it's approximately 1%. But banks may say, you know what? I want to see that you have reserve at least 1.5%. Again, in some scenario, bank may require this. In some scenario, bank may not require this. So you need to show that you have enough money to close the deal. Like what is the money go? Where does the money go? This money go for paying lawyer fees, paying some appraisal fees, if appraising required. It goes for land transfer tax. For example, in Manitoba, you will never end with 1%. Your closing costs will be at least 2% or even more, because land transfer tax expensive in Manitoba. So every province has different expenses. Ontario average 3%, may go even higher. So you need to have enough money to close the deal. A recent law started in Canada just in December 15, 2024. So this is less than a year, with just in June. So approximately half year ago, government of Canada said we had 25 years amortization for first-time home buyers. Now we will do 30 years amortization. And why they are doing this? If before you were able to purchase maybe something, now you can purchase something more expensive. Here's an example. Again, this is an example, is just general example. It's not applying situation like you have a car loan. It's not applying in some other situation. But let's say you have 5% down payment, and you want to buy a house that costs $440,000. You can do it with income, gross annual family income, $100,000. Like it's, let's say, husband, wife, Canada child benefit all together, $100,000, and you can buy house with 5% down payment that costs $440,000. And it was before December 15. After December 15, with the same income, with 5% down payment, you can buy a house for $470,000. So significant increase. Why? Because now you can spread your mortgage to 30 years. Many people say, but if I will pay 30 years, I will overpay. Of course you will overpay if you will pay 30 years. But no one asks you to pay 30 years. You need to work with a mortgage broker who will set up mortgage by the way that you can finish it in 5 years. Like if you will just go to the bank and just sign contract without understanding details, bank can give you contract that you probably will definitely will be kind of stuck, and maybe you can pay down faster, maybe you can finish in 20 years, but probably not in 10. But if your goal to get a mortgage, it will be easier to get mortgage and put it or spread it on 30 years. And after, if you have money, you can start to pay it faster. And if mortgage organized and signed by the certain rules and certain way, you can even finish mortgage in 5 years. So on the paper, you must finish mortgage in 30 years, but actually, if you have money, you can finish in 5 years. Again, not every bank will allow to do this. You need to get consultation from mortgage broker if your goal to finish in 5, 10, 15 years. Okay, maybe more question. 4% from a down payment. Okay, I believe a question 4% from a down payment, no. Like when you buying a house or condo, doesn't matter what you buy, any real estate, you must have 5% down payment. This is first requirement. And also, in addition to 5%, you need to have money to pay for different expenses, like lawyer fees. So for example, if you're in Alberta, you need to have approximately between 6 to 6.5% from the purchase price in order to finish purchase. 5% will go for down payment, 1.5% will go for expenses. I have another question here. If I have only work permit, is it allowed for me to have, let's say, 25 years mortgage? If you have a work permit, you're allowed to have any mortgage that you want. If you want mortgage 5 years, if you want mortgage 30 years, it doesn't matter. Work permit allowed to get you the same mortgage as a Canadian citizen. The most popular misunderstanding or myth. People say, oh, with work permit you're very limited. No, you are not. Every bank will give you the same mortgage for work permit, the same mortgage for PR, for the same mortgage for Canadian citizen, the same mortgage to someone who is 100 years old, and the same mortgage who is 18 years old. Banks in Canada don't care about your age. Banks in Canada don't care about your status, work permit, PR, citizen. They don't care. Government maybe care. For example, Government Ontario, they don't want that you will buy property on work permit, so they have speculation tax. But it's Ontario. I am speaking general in Canada, it doesn't matter. Another question, does it depend on a buyer age? Wonderful question. If you're 120 years old and you want mortgage for 30 years, I am ready to make it for you like now. It's not a problem. So it's like, how to explain it? It's Canada. It's against a law to discriminate by age. I am as a broker, and any bank in Canada is not allowed to discriminate by age, is not allowed to discriminate by gender, by color, and whatever other reasons that you may have. It doesn't matter from what country you come, it doesn't matter what are you doing, you are allowed to get the same mortgage. In your opinion, taking into account the risk of repairs of extra payments like a condo fees, is it better to buy a house or condo things? In my personal opinion, it depends by family structure. Like, for example, when I arrived to Canada many years ago, I had 3 small children, and there was no way that I will be able to buy condos, that I will be able to feed my family. But I was not able to afford a house. So I was looking for something in between, and I found property side by side. So house was divided for 2 families. I was living on the left part of the house, another family was living in the right part of the house. I was paying my mortgage for the left part, and another family was paying another mortgage for the right part. It was my specific situation. So it's very depends by structure of the family and how you can fit your family. But if family doesn't matter and we are looking just on money, I am looking on real estate also as an investment. Invest in the house is better than invest in the condo. For simple reason, houses increases in the prices, condos sometimes increase, sometimes decrease. Right now you can see what happened in Ontario. I remember purchasing, I remember helping to purchase condos in Ontario for million something. In the same buildings about a year ago, condos were 800 something, and who knows where price will be in a year from now. So condo housing, especially if it's a small condos like 600 feet condos, it's very dangerous business. So when I am looking on real estate, I am also looking as an investment. So if I can afford to buy a house, and maybe I will need to fix something in this house every week, I will prefer house than a perfectly built condo, because I know that this house in 5-10 years from now definitely will give me return from my investment of my money, condo may never give me too much return. So yeah, I personally prefer houses. Semi-detached, yes, semi-detached, it's side by side. Yeah, you're welcome. Yeah. Okay, let's go back to our presentation. We spoke about 30 years, and I promise that I will speak about mortgage rates. Okay, let's say I'm shopping for mortgage rates for my client, and let's say I have ideal client, and I can get him very low mortgage rate. So what is ideal client? So this client started to shop for mortgage early. He started like several months in advance. So shop around early, you will be able to pre-approved and fix lower rate. If rate will be lower, but if rate will be higher and you will buy, so before you buy, I can decrease your rate if rate will fail. For example, I have a client that like it's not situation, I'm not speaking about that it happened like months ago, but several months ago I remember it was situation when rates were relatively high. They were like around 4.8, 4.7, and the client found a property, signed contract, and possession was like a month after, rates went down, and so client eventually, contract was signed for 4.7, but client eventually, final contract was 4.4, something like this. So if rates falling down, broker can decrease rate. But if rates go up and you fix it rate upfront, so you will stay with the same rate upfront. So shop around early, it will help you with the rate. Fixed versus variable. Fixed and variable rates today very similar. In certain circumstances, I can see variable rates lower even than fixed. So pay attention. Credit score and credit history. If you have a perfect line with perfect credit history, no problem. I can get in any bank, I can get any rate. But if I have some problems with the credit history, probably a lot of banks will decline and maybe just certain banks will allow. Employment type and income. You will be surprised it happened actually several times. I had a client and we applied for mortgage. I expected very low rate, like around 3.9, and bank declined. Why? Because they said this rate just for certain type of income. I said, and what is special about my client's income? He has a stable job and everything. Yes, it's stable job, everything good, but he work in the industry that right now in trouble due to Trump movement. And this is how first time my client was actually affected by Trump. I will call this, it's hard to say that he's doing actually something, but just because he said something on his Twitter, this bank declined 3.9 to my client because my client related to the automotive industry, and so they're afraid that he will be fired, so they taking higher risk, then declined 3.9. So type of income. Loan size. The bigger your mortgage, you probably will get lower rate. Home value. Sometimes a home value can affect your mortgage. So appraisal sometimes can affect your mortgage. Appraisal, it's something as a document that usually you can get if you hiring appraiser, person who is checking the value of the house. I'm usually trying to avoid appraising because it costs money and clients don't like to pay extra money for something extra. It's not like house inspection. It's kind of bank's house inspection. It's not cheap. In some cases, I saw $2,000 inspection. So inspection from the bank was cost $2,000. So bank say, okay, I'm giving you this rate, but I want inspection. Inspection will cost $2,000. And if you will pass inspection, I will give you this rate. If not, sorry, your $2,000 in the garbage, and you will get a regular rate as everyone else. Yeah, loan to value, it's basically how much you borrowing. Like if you give like 5%, your loan to value 95%. If you give 30%, your loan to value 70%. So loan to value, the lower is your loan to value. Like if your loan to value just 50%, you're borrowing just 50%, you can get an amazing rate. If you borrowing just 5%, if you're giving only 5% and you're borrowing 95%, you can get the similar rates as someone who is giving 35% down payment. So basically interest rate can change by your down payment and by how much loan you take. Debt ratio. Debt ratio is percentage compared to your income. Let's say your income, I don't know, 100,000, and you borrowing only 32% or you need only 32% of your income to pay for your mortgage. So you will get better rate than someone who needs 39% of his income to borrow the same amount. Okay? So the less income you use to borrow money, the lower your the lower your interest rate. Make sense? Like for example, somebody makes $1,000 and he needs only to use $500 for the mortgage. Or someone make $1,000 and needs to use $900 for his mortgage. Obviously, the someone who use only half, more stable, so he can get better rate. Length. If you take mortgage just for 1 year, like amortization can be 30 years, but your contract just for a year, your interest will be higher. Your interest will be lower in 2 years. Your interest will be lower in 3 years. Your interest will be lower in 4 years. Your interest rate will be even lower in 5 years. And 5 years is the most popular choice for most Canadians. We have mortgages for 7 years, for 10 years. Not too many people sign contracts for these mortgages, so I don't want to discuss it even. But if you take mortgage for 3 years, please be ready that your interest rate will be higher than someone who takes mortgage for 5 years. You can go on the website of any bank, like RBCTD, Scotia, BMO, go to the page interest rate and look. 5 years mortgage, usually cheaper than 3 years mortgage or 2 years mortgage. Amortization. If you take long amortization, like 30 years, your probably interest rate will be like if you have, if you first time home buyer and you let's say down payment 10%, and you take mortgage for 30 years, your interest rate will be better than someone who put 20% down payment and they take the same 30 years. Or 20% down payment and takes 35 years. Okay, so mortgage has many components, and by choosing these components together with your mortgage broker, you're basically choosing your interest rate. So ask a lot of questions and ask your broker to explain why your interest rate is what you have. Home location. If it's province, based on province, different provinces, different interest rates. If it's town, city, or rural property, usually rural, you don't have too many choices. Your interest rate usually higher in rural properties. Loan type or mortgage type. If you have special mortgage, multi-component mortgage, Canada has multi-component mortgages. Again, it's for people who have 20% down payment. You can divide your mortgage in components, like first mortgage, second mortgage, third mortgage, with different interest rates, so your interest rate will affect. And in red line, or the most that influence your interest rate, it's availability to buy down the interest rate. Buy down, its term comes from United States. In United States, if you go to the bank, you can say, okay, what is the interest rate? They say 4%. Okay, I don't want 4%, I want 3.8. How much it will cost? They say, okay, it will cost 20,000. You pay 20,000 and you got, it's just weird example, but this is how it works in United States. In Canada, it's impossible. So why we are talking about properties in Canada, mortgages in Canada. Your mortgage broker, if you're hiring mortgage broker, not mortgage specialist in the bank. If you're hiring a mortgage broker in Canada, they can buy mortgage rates. How they're doing this? They're using their commission. So, for example, you hired mortgage broker and he has 100% commission. Mortgage broker can use part of his commission, 10, 20, 30% of his commission, sometimes 50% of his commission to get you better rate, lower rate. Like in my company, YRMA, I am as a mortgage broker, I am always buying interest rate. Why? Because it's a part of my company. I always did this all my years in this business. Because I like to see smile on my clients' faces. I don't like when my clients not happy. So in order to make my clients happy, I am providing the best services possible, and I am always buying rates for my clients. For example, just recently I had a situation when my client was eligible just for 4.44, and I said, you know what, I will buy 0.2 for you. So my commission was lower and client got 4.24 instead 4.44. So I used part of my commission to get for this client lower rate. Okay, again, it doesn't matter who are you. It doesn't matter from what country you come. It doesn't matter what language you speak. It doesn't matter if you're 120 years old or you just graduated, you're 18 years old. If you're not graduated, you're not allowed to get mortgage. Okay, I forgot to mention minimum age to get mortgage is the minimum age in the province. So if your province, like Manitoba, says your minimum adult like requirement, like you become adult in 18, so you can get mortgage in 18. Okay, you're not allowed to get mortgage if you're 16. Okay. It's sometimes important questions because sometimes people want their children to sign mortgage with them, together with children to buy houses, and sometimes children in 16, 17 already working. So I cannot use their income until they turn 18 if it's in Manitoba. Just an example. But I'm always buying rates for all my clients, doesn't matter religion, doesn't matter age, nationality, country that they come, or they 120 years old, as I said. Okay, questions. I want to check questions. So all of this inspection, it's about in what condition the house, or it's more about how good is the documents. Okay, great questions. So some inspections, it's about documents. Some inspections about how good is the house. Is a different type of inspections in Canada. Appraisal can done only by appraiser. It's inspection done by certified person, and who is ordering this inspection? Bank. Who is paying for this inspection? You. This is first type of inspection. And during this inspection, everything checked. Economic of the house. Is it worth 400 or is it worth 300? How it built. Like many factors included in this appraiser inspection. Second type of inspection. Sometimes you have a building and you have a company that managing this building. They're managing this building, they have a lot of financial documents, how they manage this building. You want to check these documents. We call this conduct documents inspection. So you're receiving these documents, your lawyer checking these documents, you can hire the company, especially in Alberta, you can hire companies that check these documents. Why especially in Alberta? Because in Alberta, sometimes many cases when condos was not properly managed, so banks like to see documents, like to check these documents. Again, it can happen in Ontario, it can happen in any province. I just recently noticed it. Maybe I was lucky to get more requests from the banks about Alberta properties than in other provinces, but again, it's just what I noticed. So it's the second type of inspection. Third type of inspection, you can hire inspector who is actually someone who is building houses. So he understands the engineering of the house. He can go and knock on the walls, open pipes, check from when pipes was put there, if it's aluminum pipes, or if it's plastic, or it's different materials. They can check your heating. They can say about something about your roof. They can check your roof, say, okay, this roof will survive another winter, or maybe this roof will survive another 5 winters. Again, it's different type of inspection. Another question, how much in average I as a home buyer will pay for a mortgage broker? Amazing question. How much in average I am as a house buyer will pay for a mortgage broker? It depends by mortgage broker. Some mortgage broker charge fee. Some mortgage broker charge fee based on the price of the house. Some mortgage broker charge fees based on the size of the mortgage. Some mortgage brokers not charging. For example, I am personally not charging. You will never pay for consultation to work with me. So you ask, just a second, Boris, how you paid? I am receiving commission from the bank, and it doesn't matter what bank I will work. So, for example, I started to work with you, I collected documents, I did a pre-approval, and we decided that we go with the bank A. This bank A will do a mortgage for you. After you got a mortgage, you will start to live in your house, and months if you pay your mortgage monthly. So after the possession, let's say possession June 5. So in July 5, you will start pay your mortgage, and when you start to pay your mortgage, after that I will be paid. Okay? So I paid I am personally, when I built my own business, I built my corporation, I decided I will never charge my clients. It doesn't matter what circumstances. I will always work just with the federal institutions, so or in some cases provincial institutions. So just with major big banks, like provincial institutions like in Alberta Trust Bank, or in Ontario, Meridian, it's a credit union in Ontario, or big banks like TD, Scotia, or banks like Merix. Merix is a big bank, federal bank. It's online mono bank. We call this monoline bank. It works across all of Canada. Or RFA, or Radius Financial, or Home Trust. So I'm working only with federal regulated banks. Or First National, Manulife. I can continue to speak about the banks that I'm working with, but they will pay a fee, commission fee to me, and you will never pay me. Okay? So how much in average you will pay? It depends by your mortgage broker. If you will work with me, you will pay me $0, 0 cents, and I will use part of my commission to get you better rate, lower rate. Okay, let's move forward. FHSA, if you heard about this account, it's good to have it. So, maximum contribution in this account, $8,000. You can put money in this account today and you can pull out tomorrow if you bought a property. So it's very convenient account. You don't need to wait anything. You can put money, you can invest money in GIC, cashable GIC. You don't have to invest money. You can just put money there and pull them out. Why people invest money or put money in this specific saving account? Because government recognizes this account in tax returns. So, for example, if you buy a house in 2025 and you put $8,000 in this account, okay, so you're providing a document that you use this account in 2026 when you're doing your taxes for 2025, and you will get return. I noticed the average if average income approximately 60,000, again it depends by province, from 8,000 you can get up to $2,000 return. So it's significant. So it's very good account, and everyone who is a first time home buyer must use it. I strongly recommend to use it, but before you start to use it, make sure that you have money on your regular account, check and saving, for at least 90 days, and only after that transfer to FHSA. Because if you put money directly to FHSA, you will find a hard time explain the source of this money. So the most easiest way, you have money in saving, for example, right now you have money. You checked your merge, money was already in March there, money was already in April there, money was already in May there. Now it's June. Now you can transfer after 3 months money in FHSA and use them. And you can use them almost immediately. Another, if I put to FHSA this year and pull in the same year, will I get tax return? Yes. Yes, it's a funny fact. I had case when client put money in FHSA on Monday and pull out from FHSA following Monday and get tax return. Okay? So yeah, you will get. Home buyer plan. This is a different, this is much older program. So in Canada we have retirement saving plan, RRSP. It's a special account in the bank. It's different from FHSA. If you put money there, you cannot take them out. Like FHSA, you put money on Monday, you can pull out them on Tuesday. You put money today, Thursday, you can pull out on Friday. Again, when you pull out money, when you buy a property, you cannot just pull out money. It's a special account for first-time home buyers. You can put money there, and you pull out, you take out money only after you bought a house, after you signed document that property is purchased. With RRSP, it works similar way, but if you put money in RRSP, you must, I put this in red, you must wait 90 days. So, let's say March, April, May, my money was in saving. I moved in June them in RSP. I need to wait June, July, August. In September I can use them. This is very important. Recently I had a client and I declined his mortgage. I don't know what happened after. Maybe this client now watching my video or my presentation and maybe remembering me and saying, this Boris, all because of him, he declined my mortgage. Like, reason why I declined client's mortgage, it was a winter time, and of course what people doing, speaking to their accountant. So he spoke to his accountant, and smart accountant said, put money in RSP, you will get return. So what he is doing, he's taking all his down payment and put in RSP and going to buy house. He bought a house and calling me, Boris, I bought a house. I said, wonderful, where is your money? In RSP. When you put them there, months ago, okay, in 2 months you can buy house. He said, no, I already bought, I signed paper. No, you need to decline. Can you still decline? Oh yeah, I can decline because I put condition, financing condition, so I can still decline, go out. But I really love this house. I said, okay, but unfortunately you can't use your money. You put money in RSP, you need to wait 90 days. Okay. So he said, no one told me. I said, did you ask me? No. Who you ask? I spoke to my accountant and he said that I will be fine. Accountant is not a mortgage broker. They're not allowed to give mortgage advice. So if they say it, they give you tax advice. If you put money in RSP, you will get return, and you got return. But now you need to wait 2 months until you can pull out money from there. Why 2? Because it was months already passed. So in total 90 days, 3 months. Yeah, sad story, but true fact. Will I need to return pulled money to RSP? Yes. If you pull out money from RSP, you must return them, but you have 15 years. Like 15. It's a lot of time, so it's not a problem. A problem with RSP is that money should stay there 90 days before you can pull out. FHSA much more simple. Put, you can take out, same effect. Difference between FHSA and RSP. RSP, you can remove, take out up to 60,000. But again, you cannot put whatever you want in RSP. You need to calculate it's based on your income, how much you can put on RSP. FHSA, you have limit 8,000 per year. It doesn't matter what is your income. RSP, how much you can put in RSP, it's limited by your income. So speak to your accountant to check it. But if you put money in RSP, you can pull out only after 90 days. Some people use this maneuver. It's called home buyer plan maneuver. So it's for long planning. So for example, I need money for down payment. I don't have enough. Okay, so what can I do? I go to the bank and ask for loan. I ask for a loan, and not simple loan, RSP loan. I put the money that I got from RSP loan, I put in RSP account. When I put money in RSP account, I will get tax refund. I can use this as down payment. And also the money, the RSP I can pull out after. So basically this is a way how you can borrow your down payment. Let's say your down payment only 2%. You need another 3%. You can borrow the 3% as a RSP loan to put it into RSP account and take it out after 90 days. Please be careful. You need to hire somebody who will help you to do this, like a mortgage broker, like a mortgage professional who knows how to do this. Because if you will take too much loan, you will have payment on this loan. And maybe this payment on this loan prevent you to buy the house that you like. We spoke about car loan. It's negatively affecting how much you can borrow. The same with RSP loan. It's negatively affecting how much you can borrow. It was a question here, can I have both RSP, FHSA? You can have TFSA, RSP, FHSA, you can have everything, not just both. Whatever banks Canada have, everything, any bank in Canada, you're allowed to have all this account together and you can use all of them together. Just be careful. Next. This is very short. Let's say you bought house in 2025. When in 2026, when you're doing your taxes, please tell your accountant that they will claim HBTC, Home Buyer's Tax Credit. You can claim up to 10,000. Basically, you will get return 15,000 from this 10,000. And if you have good income, so you will get back $1,500. Okay? So this is another way to get your taxed money back. So when you're working, you pay taxes, yeah? You already, I believe most of you already familiar on how to get tax return. So when you're doing tax return, speak to your accountant, mention that you purchase a house, and you can get up to 1,500 from your taxes that you paid in 2025, in 2026, if you will buy a house in 2025. By the way, if you know friends who bought house last year and maybe didn't claim this, let them know. They can go and start to claim and redo taxes. Many people don't know this. And the last one, the last thing that I wanted to talk today, first time home buyer, new homes GST rebate. It's a brand new, just several days ago, new law in Canada, May 27, 2025. A new liberal government promised to do something for first time home buyers. So what they did, they cancelled GST for new housing. Honestly, is it really help first time home buyer? I don't have too many first time home buyers who buy new houses. No, just for example, if you're in Alberta and you want to buy used house, you can find probably used house for even 400, 500, maybe not the best, but still you can find something. But if you want to build house from scratch and get 100% rebate, your house probably will cost 600, 700. So yes, it helps. So it's a law that will help you. So again, if you're building a brand new house in Canada, you will get 100% return of GST if your house under 1 million. If your house between 1 million and 1 million and a half, you will get partially rebate between million and million and a half and full rebate under 1 million. If you first time home buyer and buy house for 2 million, you will not get any rebate. But again, this is kind of funny law. Why? Because no one is too strong. I will say it's extremely rare that first time home buyer will buy house for 2 million. First time home buyers, even if they're Canadian citizen with very good income, they probably buy, even in Ontario and Vancouver, they probably buy in $1 million or around $1 million, maybe $1,200,000. They don't buy houses in 2 million. Okay, so how to be eligible? You must be first time home buyer, and you must sign contract after May 27. So if you sign a contract today, it's good, but no later than 2031. So this law basically only temporary law for 6 years, and construction must be finished and must be done between 2031 to 2036. Why they giving some 5 years spare? Because if you're buying new apartment in the building that high rise, they may not finish this year. They may finish in 2035. So yeah, take this in consideration. Okay. So does it apply only for GST or provincial taxes as well? No, it's not applied for provincial taxes. Provincial taxes, land transfer tax, it's something different. It's just GST for new houses. Okay, what I will do, I finished my presentation. So what I will do, I will wait several minutes. Maybe you will have any additional questions. If not, we had a really good conversation today. Many people participate. I saw people from Quebec, from Manitoba, Alberta, Ontario, BC. So yeah, I very happy that we had so many people today. Not too many participate in the chat, but thank you very much for everyone who find the time to learn about very important purchase in your life. Yeah, you're welcome. Could you share the link with your contacts again? Don't worry, you don't need this link because you can go to the beginning of this video and you can see this at the beginning of the video. So it's Linktree Boris S. Okay, if you will in any way, if you can just leave a comment. You know what? I will put a link in chat. I will do it now. Yeah, just a second. Yeah, here's my link. Yeah, this is a link. So through this link, you can read about me. You can look on Google reviews, what people thinking about me. You can watch previous videos with previous similar seminars, investment seminars, anything like related to real estate. I also had several years ago a seminar about credit history, credit score. You can watch this. So you're welcome to watch any videos from my YouTube channel. If you want to read I'm basically writing something related to mortgages almost every week. You can, through this link, follow me on my Facebook page, on my Instagram. Instagram is much more shorter version. Facebook has a full version. My Telegram channel has a full version, so you can follow me on Telegram or Facebook page, and I'm almost every week I'm posting something related to the mortgages. Last post was about credit score, credit rating, and before this was invitation to this webinar. Before this I already don't remember what I wrote. Sometimes I'm sharing stories about real people, first time home buyers or second buyers who try to buy something. I'm sharing successful stories, I'm sharing failures. Yeah, the more than welcome to watch these stories. Okay, I believe we can finish this presentation. So thank you very much and goodbye. I hope to see you guys buying your properties, your houses, and if you need help, I'm here to help.